It's showtime. Fantastic. Good day, good evening, everyone. Happy Wednesday. What do you say? Just wanted to welcome you to tonight's webinar. Tonight's webinar is Market Truths and Opportunities in the Greater Phoenix Metro Area. All right, I am Natasha Tomlinson, your Arizona realtor, your neighbor, your truth teller in a market, well, let's just say it's keeping us on our toes, okay? So before we dive in, I want you to drop where you're from. Where are you joining us from tonight? Across a few different social channels right now. So where are you joining? Are you local or are you somewhere else in the country, somewhere else in the world? I'd love to know. Who am I talking to this evening? All right, we have Phoenix. We have Eloy. Prescott. Okay. We have Toronto. Okay, fantastic. Where else? Chicago, Portland, Dallas, Charlotte, North Carolina. Haven't been there yet, but I'd love to visit one of these days. I'd like to visit all sorts of places. So anyway, great. Thank you for that. Well, tonight's topic is one that gets a lot of strong opinions for some reason. But we're talking about new construction, new home communities, the shiny, fresh paint smell, the no one's ever lived in this home before dream, right? But before we're going to look at it, we're going to look at it from two angles, from as a primary residence, as your forever home, or your long-term home, your 5 to 7 year stepping stone. And we will look at it as a long-term rental investment, the buy it now, cash flow later play, right? And, I promise not to sugarcoat anything for you here tonight. You're going to hear the good, the bad, and the ugly, right? That not many will tell you until you've already signed on the dotted line. So fair warning, before the end of the night, you may feel a little more cautious than you do right now, but you'll also feel more confident. That's the goal. And that's exactly where I'd like you to be. All right. Let's add some information here for you to sneak a peek at, and I'll change this as the evening goes on. So you can get an idea of where things are in our market right now as of today. And this is resale. These numbers are resale single family residence. Okay, great. Let's see here. What did I just do? Okay, losing it. All right. So again, in case you're just tuning in, I am Natasha Tomlinson. I'm thrilled that you're here today. You could have been anywhere, and I thank you for spending some time here with me. So whether you own a home or you already invest in real estate, or you're just curious as to what is going on in the greater Phoenix real estate market, tonight's conversation is going to be direct, data-driven, and hopefully I'll sneak in a little bit of humor in there. We'll see. All right, I'll do my best. We're in a market that is shifting under our feet. And while that may be intimidating for some, it is also full of opportunity for people who know how to navigate it, how to navigate these waters. And that's why you're here tonight, right? So let's start with the buyers out there. If you're a seller, be sure to lean in, because knowing your buyer's mindset That's gold. Since April of 2025, our active supply of homes, the number of homes for sale, has dropped 13.6%. And you're like, wait a minute, how is that? And why? Why is that? Well, we had a big wave from May and July of canceled or expired listings. So let me backtrack. What is a canceled or expired listing? You know, when you put your house on the market for sale, you sign a listing agreement for a certain period of time. And that means that person went through the listing period and decided, and they didn't relist the home, and the home did not sell. All right. So the market did not respond to their marketing and their price. So that listing expired, or they canceled a listing. The seller changed their minds about what about selling their home or whatever. Okay. So, and we're not having enough new listings come on the market to replace the ones that are leaving the market unsold, right? July of 2025, we saw cancellations up 64% when compared to this time last year. And expired listings are up 69% when compared to this time last year. Now, here's the silver lining. Home buyers. Okay, mortgage rates have also eased a bit, right? We were looking at 6.75 to 7.5, and now we're closer to that 6.5 range. I mean, every bit helps, right? And accepted contracts are up 14% since July 4th of this year. So we're gaining momentum, and the momentum is in your favor. So the median sales price, it looks flat when compared to this time last year. So sellers are quietly lowering their price to meet the market today. They're not trying to push price up. Excuse me. Especially with condos, and especially under 500,000, right? Here's a kicker. 56% of home sellers in July helped buyers with their closing costs or helped them buy down the rate. 56%. And that number is up in August. So far, we're at 58%. So if you've been waiting to get in, wait no more. We have zero bidding wars. Sellers are willing to sweeten the pot a little bit, right? With help with your closing costs, help to buy down your interest rate to a manageable level. This is your moment. But, big bubble but, the market has started to improve a bit, right? We're seeing lower supply and our demand is steady. So that means that our buyer's market, you know, the clock on that could be ticking. You know, my crystal ball has question marks, right? I don't know whether we're going to all of a sudden start seeing bidding wars or interest rates are suddenly going to drop or any of that. All right. That is above my pay grade. But if you're looking for a mix of low rates, lower prices, and seller incentives, you don't have years. They're happening right now. Okay. Now, all right, sellers. I hear you. It's been a marathon. Your home has been on the market longer than you expected. You know, we went from bidding wars to homes flying off the market to longer marketing times, longer days on market before you see that accepted contract. And condos, that marketing time is even longer. And for some may find it exhausting. Now, even though our buyer's market appears to be easing, prices usually don't hit bottom for 3 to 6 months after we've been in a balanced market. So if we balance in October and November, this is hypothetical, if we balance in October and November, that means our bottom would be about February and March. Okay. So it's your decision to make, Mr. and Mrs. Home Seller. Sell now and deal with the concessions and the rate buy downs, or wait and potentially get an even lower price then. even if you skip out on giving closing cost contributions. So in other words, what you save later, you may lose in price. Here's the curveball. Big banks are quietly predicting, I guess their crystal ball says something that mine doesn't, all right? They're quietly predicting a 30 to 40% chance of a recession in the foreseeable future. That could mean anything, right? But what it has historically meant, lower rates, more money flowing into bonds, mortgage rate drops, and buyers coming back into the market. So if that happens in Q4 2025, in the fourth quarter of 2025, activity picks up and sellers, you may get some relief. So again, if and buts and maybes, right? Time will tell. It's strange to say, but in real estate terms, a mild recession could help move this market faster. So here's a short version, right? I know that was a mouthful. Here's a short version. Buyers, you have leverage now, today. It won't last forever. Your seller concessions, while they're handing them out now, Halloween doesn't last forever. They're not always handing them out like candy. And sellers, it's important to price strategically. Your days on market are longer, and your price reductions are visible online. Okay, it's all visible online now. So if you must sell, get aggressive today before we hit a true bottom, right? Investors, consider condos under 500,000, single family residence under 500,000 for the deepest discounts. And with rental demand steady in many parts of the valley, those are ripe for buy and hold opportunities. So if you're thinking new construction, new home communities, this market is practically begging you to at least look at what builders are dangling in front of you right now. So without further ado, let's jump into the pros of buying in a new construction community as your home, as your primary residence. So let's start with the dreamy side of things. Let's make sure we don't have any questions going here. Good. Let's start with the dreamy side of things. But let's be honest, walking into a brand new model, it looks, feels, and smells like HGTV in real life. Pro 1, everything's new. No one else's wear and tear, no one else's funk, right? I mean, the latest building codes, energy efficiency, lower maintenance costs for the next 5 to 10 years. I mean, that's the sell, right? Pro number 2, you get to choose your finishes, your layout. You get to tweak it a little bit. Do you want a 4-bedroom? Do you want a 3-bedroom and a den? Do you want a 2-car garage, a 3-car garage? What type of elevation are you looking for? You get to tweak your colors. You feel like you had a major play in building the house, right? And if you're decisive, this is pure joy. And if you're indecisive, it can be expensive and overwhelming. Pro 3 are the builder incentives. So it's important to know yourself, okay? Pro 3 are the builder incentives, closing cost credits, rate buy downs, free upgrades, appliances, landscaping allowances. In today's greater Phoenix market, some builders, again, are also tossing in HOA dues for a year. And pro tip number 4 is most builders offer a workmanship warranty and the warranty on structural. Pretty exciting. Let's change cities, shall we? Great. Now, quick poll. If you were buying a home today, what's that one upgrade that you would splurge on? All right, I'm curious. So be sure to drop it in the chat. I'm curious. Is it the kitchen? Are you more of a backyard person? Would you splurge on a certain type of flooring? Would you put some designer wallpaper, those backsplashes on there? Would you opt for the walk-in shower, or do you prefer the tub? Let me know. Let me know what those must have upgrade, that one upgrade that is a non-negotiable for you. Okay. Now let's get into the fine print, right? The fine print that those glossy brochures, they don't mention. Con 1 is, we went over the pros, now we're going over a few cons, are the location trade-offs. Many people aren't working from home anymore. They're being called into the office. Maybe not 5 days a week, but there's more commute time to consider. And new builds are often on the outskirts of town, 20 to 40 minutes further out. That means longer commute times, fewer mature landscaping, and amenities are coming soon. Okay. Con number 2 is the upgrade trap. So the base price, it looks great until you add those 80 plus thousand in options. Okay. Builders make high profit margins on upgrades. And yes, I'll say it, they count on you to overspend. Con 3 is the appraisal gap. In a shifting market, your finished home might appraise for less than you paid if prices dip based on your build time. And number 4 are the construction delays. Listen, we are in Arizona, right? But we still are dealing with people and labor shortages, supply chains issues, weather, because these supplies come from somewhere else, right? So it happens. Do you want to deal with it? If you are selling another home, this can create temporary housing headaches. So let me just say, I've had clients' hands, I've held their hands, through a 6-month delay, and it can be stressful and it can be costly. So now let's shift gears a bit and talk about new construction, how it performs as a long-term rental in the greater Phoenix metro area, right? So some pros for you investors out there. It attracts high-quality tenants who value newness, and many do. So lower repair costs early on and better cash flow predictability. You have competitive edge in markets with older housing stock, and you get depreciation and tax benefits. Now, the cons are it's a higher purchase price today than it was years ago, right? So you could potentially be looking at a lower cap rate initially. There are HOA restrictions in new communities, and some HOAs limit rentals to 6 to 12 month minimums. So the short-term rental, vacation rental, Airbnb is not an option in some new home communities. And if neighborhoods are still being built out, more rental competition from other investors in that community. Now, I had an investor client a while back, last year, right? And they bought a 4-bedroom home in Surprise. Gorgeous place, energy efficient, easy to lease, premium rent. But they weren't the only investor who decided to buy in that community. 3 other investors in the same phase did the exact same thing. And suddenly 4 nearly identical rentals were on the market. You get the problem, right? Pros and cons with everything. So investors here tonight, type yes if you've ever lost a tenant to a brand new rental down the street. I'm curious, right? Let me know. So what do you do with this information, right? If you're a primary residence buyer, take advantage of the incentives that are offered, but know your upgrade limit, know your budget before you walk into that design center. Know the things that you want to have done now and things that you can add later. If you're an investor, run the numbers using realistic rent comps based on long-term rents. And if you're using, certain loan products like a DSCR loan, you will have to use long-term rents and factor in potential competition. In both cases, location matters. Pay attention to growing areas, growing employment centers. That shiny new kitchen means nothing if you're 45 minutes out from where people want to live and work. Okay. And please, please, pretty please get representation. Yes, I can help you, but get representation. If not me, someone. Builders have friendly sales reps, but they work for the builder. And my job is to work for you. So here's the big takeaway tonight. New construction is a fantastic choice if you go in with your eyes wide open. So whether it's your dream home or your next rental property, the key is timing, location, and negotiation. If you want a personalized breakdown of what Phoenix metro communities and builders are offering the best deals right now and which ones that you may want to steer away from, book that free consultation with me. I'll help you run the numbers, compare incentives, and give you the honest truth, no fluff. All right. Here's the link to book. I'll make sure you have that in the chat here. And outside of that, I just want to say thanks for chiming in tonight. Remember, the best real estate decisions aren't about chasing the market. They're about understanding it, right? So I am Natasha Tomlinson, and I will see you next week at the next webinar and real estate market update. Ta-ta for now.